Hi, wonderful viewers. I remain Nyawargak Kiir, and this is Waraga Global Influence Podcast. Here in this show, we inspire your hearts, we educate your minds, and making sure that we impact your lives in where we can by the special grace of God. Now, today is yet another exciting episode, and this is about trust. We are going to dive deeper into trust. And many of us think that trust is only for wealthy people. Well, let's find out today. With me today in the studio is a guest that is a trust professional or a trusted lawyer, and his name is Wakili. So let's get to find out who really should be in the trust and who should be the settlers. Is it the middle class? Is it the rich? Or even you and I can also do the trust. So let's get to find out. And for those of you who have been subscribing, sharing, we really want to say thank you from the bottom of our hearts. And if this is your first time, we do strongly tell you to share it with your family, with your friends, so that you don't miss any of our impactful videos, because we really mean business. We want to bring content, guys, that will touch your life. So let's dive right into it. Hi, Wakili.
Hi, Ms. Paul. It's really nice to be here with you and get an opportunity to discuss about trust, estate planning, and I thank you for the opportunity to invite me in this podcast. My name is Marvel Oloo. I'm a trust lawyer and estate professional, and my job is to help families plan their wealth beyond their lifetimes. So my real name is Marvel Oloo, but on TikTok I'm known as the real Wakili. For those of you who are not Swahili speakers, Wakili means lawyer. So I'm the real lawyer. So it's a privilege to be here with you in your podcast and to get an opportunity to impact lives and convey the information that I have to your audience. So thank you so much for inviting me.
Thank you so much for making this happen. I mean, we're very excited and glad to have you here, because oftentimes many people think that trust are only in the US, in the Western world, and they think that it's only belong to wealthy people. So I'm glad that we are going to dive deeper into this conversation. So for a simple, simple term, what would you describe a trust like for people who might not even understand the word trust in a simple manner?
Well, if I had to describe what a trust was, I'd describe it as an entity or a vault for holding assets and protecting it from the government, from people who want to steal your assets for the benefit of your family. So basically, when you put property in a trust, you're able to create generational wealth because you can really pass it down to your second and third generations. You see, when you set up a trust and you put your property inside, here in the law in Kenya, at least in Kenya, trust can last for up to 125 years. So it's a very simple way to plan for your succession, to plan for your wealth after you die. You don't have to just leave everything to chance and leave it to the judge to decide where your property is going to go.
That's very interesting. And I mean, death is guaranteed, as you said, right?
Yes, absolutely.
It comes to anyone.
Yeah.
I think it's best that we all get prepared. We don't walk like we don't know what is ahead of us that will happen. So it's good to be intentional about trust, right? So who is to really go for the trust? Because some people out there may even be thinking, you know what, trust is only for wealthy people. Trust is not for me. So why should trust be considered, especially for people that has less capital, for people that are ordinary, the ordinary families? Why is trust such an important aspect to look at?
Well, I don't want to lie to you. I want to tell you the truth so that you can best help the people who are actually viewing this podcast. So who should go for a trust? Basically, anyone who has property and who has, let's say, children or people that they're interested in serving. That being said, there's so many different types of trust. We have charitable trust, family trust, and a lot of other trusts that we'll get into maybe later in the podcast. So who should go for a trust? Number one, you cannot have an empty trust. To have a trust, you have to have some property. We're not saying that you need to be a billionaire or a millionaire or anything, but there has to be something worth protecting, and there has to be someone who you want to protect. So the qualification for having a trust is you have to have property, you have to have acquired at least something, and you must want to pass it on to someone, because otherwise, what's the point? That's the true answer. So if you don't have property, forget about a trust. That's the truth.
How does somebody identify? I'm curious to know that. How can somebody identify the trust that suits their situations? Let's say, for instance, the family trust, right?
Yes.
So how will I be able to actually identify the trust that will suit my situations or my family situations?
Okay, so if you want to identify the trust that will suit your family situation, the short answer and the actually more accurate answer is you need a trust professional. There's so many different types of trust, and if you dive into it by yourself, maybe going on Google or any of these things, you can get quite a lot of information. It's all out there, but it's good to work with someone who has experience in how these things actually
Right.
work. Remember, at the end of the day, you're putting all your assets into this thing. So at the very worst, you need someone who really knows how it works. Because once you lock your property in some trust, for example, an irrevocable trust, you cannot change the document again. So we've had some clients who've actually come to me who set up trusts with people who are not very, or lawyers who are not very professional at it, and ended up having almost 300 acres stuck in that trust. And a few clauses were left out, and they're not able to pull back and get their property out. So I would say your best bet is consulting a trust professional, not just a lawyer, but someone who has dedicated their life into this. And that being said, I'm not really marketing myself. I'm just telling you the truth about what it is that you need.
And you are here. So if anyone wants to go into that trust, you're here. You're the
Absolutely.
trusted lawyer.
I guess you could say that.
So what are the major types of trust? You mentioned a couple of them earlier. There is irrevocable trust. Does that mean you can revoke it anytime? So what are the major types of trust that the people mainly go for?
Okay. So let me speak in terms of my own experience and some of the most popular trusts that I've gotten to see in my profession. Number one, we have something called an irrevocable trust. As you've heard from the word irrevocable means you are incapable of revoking it.
Yeah.
So an irrevocable trust is simply a trust that once you set up the trust deed, which is actually the constitution of the trust, you cannot change it later. So this is very popular for old legacy families who have huge properties that they want to make sure are never sold no matter what.
True.
So for example, you have maybe a house that was given to you by your father or your grandfather and it has sentimental value for you. You don't want this to be sold amongst all your assets. You lock this in irrevocable trusts. It is actually also very popular with business people. Maybe you've acquired some assets and you don't want it to be exposed to any tax challenges or maybe credits or debts or anything. So if you lock it in an irrevocable trust, it becomes very difficult even with the judgment from courts for them to access that property because they can't even change the trust and they can't even compel you to change the trust. So if you want to protect your property in a very solid, irrevocable way, that's your bet. That's your best bet. Now, one of the limitations with an irrevocable trust is you lose some certain level of flexibility. So if you're from a family or you're someone who is still interested in growing, you're still trading these assets here and there, you want to sell land here, buy some shares here, you want to maybe liquidate this asset and end up buying something ahead, I would not advise an irrevocable trust because it will lock you in because you won't be able to sell that particular asset. So an irrevocable trust is for those people who want to protect assets, lock it down, and make sure that it's not sold within the lifetime. Now, that being said, let me move to the next level of trust, which is something called a revocable trust, or also a living trust. So a revocable trust is actually one of the most popular offerings we usually have from some of our clients because it's actually usually preferred by younger people. Let me say between maybe 50 going down, because or let me say even 40 going down, because you see, at the end of the day, they're still maybe growing their assets. They're not in that stage where now they're thinking about grandchildren. They're still thinking about wealth multiplication. They still need to make a few moves here and there. So with a revocable trust, you can make changes. You can remove trustees. You can sell properties. You get a lot of flexibility with that and also a lot of protection as well. Because the idea is simply to move the ownership of the assets from your own name into the name of the trust while retaining control, because you retain this control by making sure that you have selected the trustees, the beneficiaries, so they'll run everything according to how you wish, but it just won't be in your name. So when anything comes at you, be it taxes, divorce, or any other challenges coming from life, they will not be able to access your assets because they're in the trust, they're in the name of the trust. So that's a revocable trust. There's so many different types of trust. I could name even 20 if I really wanted. But these are some of the most popular ones that you'd really want to understand. And finally, one which we also get from some of our clients of outside various countries, for those who have assets in different countries, we have something called an offshore or a cross-border trust. So an offshore trust is simply a trust that has been set up in an offshore jurisdiction. Not only an offshore jurisdiction, but usually they set them up in tax havens. And a tax haven is simply a country where they have very low or very favorable tax regime. Of course, you've heard of Mauritius. We have Dubai, some special economic zones in Dubai. So when you set up a trust there, it's called an offshore trust. And you can set up a trust in a way that now you are able to own assets from all over the world and centralize the succession process, the ownership of your properties, without setting up trusts in each one of those countries. So there's actually a lot that goes into this, but I hope I've described that sufficiently.
Yeah, thank you so much. That's such an insightful. Yeah. I would imagine if somebody, because having wealth, accumulating wealth is not an easy thing. It's not overnight. It takes you time, it takes you energy, and it takes you probably also, a lot. It's more than one thing, right? So I would imagine you building that wealth so hard, only for maybe a child to enter into bad marriage and some of your portion is gone. I love what you mentioned earlier about you always advise actually in TikTok not to put out our assets in our children. Can you talk to us about that? Why is it such a very bad mistake to put our assets or properties in our names or in our children than a trust?
Okay, in order to describe that, let me just start by saying I would not advise you to put your assets in your children's name. Number one, because it's a terrible idea. Why? They're a child. At the end of the day, you have no idea how this child is going to turn out. And before they even get to, let me even say 25, because that's the age that most of my clients usually want their kids to start having a role in the management of the trust, their frontal lobe has not even developed. So what happens when you take, I don't know, $100,000 and give it to a 20-year-old? You'll be seeing them in Vegas, partying, gambling, and it will really destroy their lives. And this is something that I've managed to see up close as a professional in this area. So you see, when you put your assets in your children's name, should anything happen to you, remember, when you put the property in the children's name, you can only give them the property, but you cannot tell them what to do with the property. It is theirs, so they get to make the decision. And as you told me earlier, that building generational wealth is very hard, but burning it down can take just one day or 1 month. So the reason I tell people to put their property in a trust is when you put the property in the trust and have your children as trustees or beneficiaries, you can set the rules about each one of these properties and how they're meant to be used. And I'll give you a very simple example. There are clients who usually say that they will only allow the children to have access to the trust once they reach 25 years of age, as I've said, or once they have graduated from university. These norms are very different depending on families. Some people don't believe in education, some believe in education. I even have a client who once told me that they wouldn't want their children to access their property in the trust if they were into alcohol. Which is a bit extreme, you can imagine. Yeah. But you see, every parent sets in the rules. So with the trust, you're able to also shepherd your family in the right direction in terms of what it is that you're trying to achieve for these children. Now, that's not for me to say. I usually say that my job as a trust lawyer is to be an architect and to actually just bring into life what the client wants me to do. So it really depends on the particular parent, but I can just say the only way that you're going to be able to control your assets and make sure your kids benefit from it, I can say with authority, is by putting it in a trust.
In a trust.
Yes.
Wow, this is great indeed, because and in that condition, I understand sometimes, like what you mentioned, you'll give, and they always say we pray for certain things, but God always answers based on our capacity, right?
Absolutely.
God cannot give us a lot of money, cannot give $10 million to 20-year-old. They will do all manner and things. So who are these people that we can put in our trust? Let's say the settler is the person that is the one to build the trust, right?
Yes.
So how can settler now know the people to be put in trust? Who are these people? Can these people be our family members? Can these people be our friends? How do we identify the right people to put in a trust as settlers?
Okay. Just for the benefit of the audience who may not know what a settler is, a settler is the founder of the trust. In a company, you'd simply call them the founder. They are the people who put in the assets into the trust. The trustees are the people who manage these assets. In a company, you'd call them a director. And the beneficiaries are the children or any person you want to take care of. They can be your mother, your father, your grandchildren, or anyone who is depending upon you. So now, to answer your question, how do you select a trustee? Number one, you have to select someone that you trust. Okay. So that could be a sister, could be someone maybe you've observed in terms of if you have children, how they relate to their children, their integrity, how they carry themselves, and also even maybe the level of education. Because you see, there is some certain level of exposure which is needed when it comes to managing of assets. So that can be a sister, a brother. It could even be a child if your children are above 18 years of age. Because, I mean, who have you trained more than your own children? So most families usually prefer to put their children or close relatives to manage their trust. That being said, I don't think it's something that you should really be so scared of in terms of putting trustees. Why? Because a well-drafted trust doesn't need the trustees to be so honest. Because if you draft the trust correctly, it means the rules are so well thought out that even if one of your trustees chooses to do something bad, they can't.
They can't do it on
They
their
can't do
own.
it. They can't do it on their own because the rules really have them in a box in terms of what they're allowed to do. You can, for example, have a rule that says you're only allowed to withdraw as a trustee up to maybe $50,000 only without approval of the other trustees. So there's a lot that goes into drafting the trust constitution and just the decision-making process. So who should you select a trustee? Someone that you can trust. You never know who you can trust.
Yeah.
Someone that is intelligent and has the best interest of the beneficiaries, your children.
True.
That is who you should put in the trust. But is that what you should rely on? No. What you should rely on is the trust deed and how you put these roles in place so that they're just there to execute the roles that you have created for them. Yes.
Amazing, amazing. You know, there is a way wealthy people actually gets away with some of the taxes. Maybe we can dive deeper into that. And like one of the most taxes we all know that people fear most is is it called gain tax? Tax gain, right? So how do we avoid, like the wealthy do? How do we avoid these taxes sometime?
Okay. So there's very many tax advantages to having a trust. Let me begin by talking about maybe capital gains tax and stamp duty, which is basically imposed on real estate assets when you're moving them from one person to another. Capital gains tax is exempted depending on how you draft your trust, at least here in Kenya. So capital gains tax, for example, in Kenya is around 16%. So
that's a lot.
It's a lot of money. If you think about it, it's quite a lot of money. If you have a property, say worth 100 million Kenya shillings, we're talking about 16 million. So capital gains tax is a tax that is imposed by the government on people on the capital gain on their properties. So if you bought a property for, say, $1 million or shillings, and 10 years later, this property appreciated to 10 million shillings. That means that the capital gains would be 10 million minus 1 million, which is 9 million. Now, you have to pay 16% of that to the government when you are selling that property. And that's just money that gets out. So it's a lot of money when you really think about it. And the difference between the wealthy and, let me say, the rest of the population is the wealthy, they have this information. So why would I give all this money to the government when there is a legal way for me to not pay this money and deploy it towards other needs? So now that's where trust comes in. That's where company structuring also comes in. And you are able to now benefit from these exemptions, like capital gains tax exemption. Here in Nairobi, we also have another tax called stamp duty tax, which is also charged on.
How does that work?
It's the same thing as capital gains that I've described, but now stamp duty is 4%. So when you're transferring property into someone, now the 4% has to be paid to the government again. And this is not something you can navigate around. This is not something you can negotiate. It's not something you can talk over the table for. This is just money that goes to the government. And I feel confident talking about this because at the end of the day, everything I'm saying is very legal. True. So all I wanted to do was to bring this information to the people so that they can find a way to plan themselves and find a way to build generational wealth, even with the little that they have. So information and knowledge is power. That is even in the Bible. So this is the kind of information that I set out to spread out to the people. So these are some of the tax exemptions that you get. There are other exemptions that you also get on a trust, for example, charitable trusts, which are trusts which have been made for the purpose of doing charitable causes. And that's why you always see that for all these rich families, they always have some kind of charitable foundation or trust for giving out to the poor. So they get
giving back,
you know. So once they have that, there's a way you can structure it where whatever now you're doing through that charitable trust is not going to be taxed. So you can bring in goods, services, you can charge, but it will not be taxed because it's being looked at as for charitable purposes, for the benefit of society.
Yeah.
So I could actually give a whole masterclass, which will take maybe even 10 hours for me to do on what you can do. But I think that's the best way that I can explain this. Now, one thing I'd want to also mention when it comes to tax benefits, because there are those people who have assets in multiple countries. And I think it's important for me to address that because you've been given this opportunity.
Absolutely.
So when you set up your trust in a tax haven, now you get to benefit even more tax exemptions.
Really?
Absolutely.
Wow.
For example, I can tell you, country like Mauritius, you don't pay withholding tax. Capital gains tax is usually exempt or between 0 to 5%, as opposed to the 16% I was talking about earlier. They have so many tax exemptions. So the idea is you set up your trust in an offshore tax jurisdiction like Mauritius or Dubai or even Delaware. And once you set up that trust there, the trust now becomes a Mauritius trust. It is considered as of that country. So when you look ultimately, this for the big businessmen, at how much money you end up paying in terms of taxes, it will always be very, very little money compared to what you'd have paid maybe in your country. And that's why you always hear the big businessmen, politicians putting their wealth offshore. Offshore. That's what they mean, off the shore, in a tax haven. So it's all about how you structure these things. But even in your own country, you can benefit from some of these advantages because a lot of people are really holding to real estate assets and cash. And even that stamp duty and capital gains tax, it's really a lot of money saved when you think about it. And this is a lifetime thing. Yeah.
Can we build a generational wealth with this trust?
Absolutely. You see, but at the end of the day, I don't want to deviate and maybe confuse you. A trust is essential for building generational wealth. Why? Do you know the statistics? I think it's called the shirt sleeves to shirt sleeves rule. You can look it up. Statistics say that wealth does not last to the second generation. Around 70% is lost by the time we're entering the second generation, and 90% is lost by the third. So we only have around 10%. Out of 10 people, only one person will have their wealth last to the second generation. This is a study that was done, I think, in America, and it's actually known as a statistical fact for those who are accountants or those who are in the financial space. So what's different about this one person as opposed to the other 9 people? You cannot tell me that he raised his children so well. We all have the best interests for our children. The difference is that they had a structure in place that guaranteed that this wealth could be moved from section 1 when I pass away, my children, and after my children, my grandchildren. So it really falls down to putting a structure in place. We're not saying that everyone is irresponsible, but I mean, we're human. We all have our limitations. So a trust is essential for building generational wealth. However, you still have to, of course, create the wealth by adding value and giving value to society. So that's one thing. I'm here to protect what you managed to come up
Built.
with by avoiding taxes, which is very legal, not evading, just to be clear, is through using legal means, and also by structuring your wealth so that it ends up where you want it to end up. It's you being intentional about how you want your assets to be spent. Yes.
You mentioned about protecting it. Does that mean when we build a trust, we can protect our property, our assets from the lawsuits, from the creditors? Does that work? Does trust really contribute to helping us protect our assets from all of those things?
Yeah, you see, at the highest levels of society, a trust is not even anything new. It's a no-brainer. Because at the end of the day, you have someone who maybe like Elon Musk or the Rockefeller family. This person has billions and billions and billions of dollars. Correct. Or millions of dollars, but they're not in his own name. He doesn't need to own it in his own name. He puts that property in a trust and then takes risks in his own name. That's why you hear someone like Donald Trump has declared bankruptcy, I think almost 5 times, but he's a billionaire. Even as he declares bankruptcy, you won't go and touch those assets that are really close to the family, because those assets are not his alone. Remember, the trust belongs to the beneficiaries. So how can you come and sue him and take the assets when they're not even his in the first place? But remember, the beneficiaries are his children. They're the ones who run everything, and everything we do in this life, at least on the material plane, for a lot of us, is for our children. For our children. Because it's, it's vanity anyway, this life. We'll all die. And will pass. But you want to make sure that your children don't end up homeless or worse, depending on where you're coming from. Correct. So it's about moving it from ownership from person A into the trust, and then now taking risks in your own name. Yes.
These offshores that you mentioned earlier on, who are the people that to do that? Is it for everyone, the offshore trust, or is it only for those that really have a lots of money and want to protect their wealth? Or can anyone do the offshore trust?
Now, to do the offshore trust, the reality is they're a bit expensive than local trusts, and they have usually have an annual management fee, because you see, they have to open up an office for you in the offshore country to prove that that trust is domiciled in that area. For example, if I'm in Mauritius right now, I set up a trust for you. We have to manage your accounts. You have to file with the government. So the long and short of it is, you need to have some certain type of assets. You have to be able to pay that fee comfortably. And if you want to know whether you can, you're supposed to have an offshore trust, the question you're just supposed to ask yourself is a very simple question. How much money am I paying in taxes in the country where I am? How much is the offshore trust? Compare the two. If the offshore trust is cheaper, then you need to set up an offshore trust, because you're giving away money to the government that you don't need to give. So it is just a simple mathematical equation. The funny thing is also, a lot of families don't know this. So it just depends on what you're bringing in, what you're paying in taxes in one country A, as opposed to what you would pay to set up a trust and maintain a trust in country B. That's really just it.
I know my viewers, some of them are already rolling their eyes. They want to know how much how much does it cost to don't worry, I'm asking. Yes. So how much does it cost to register a trust in order to protect your generational wealth?
Are we talking about an offshore trust? Or
like an offshore trust. You can tell us about how much it costs us to register an offshore trust, and also maybe 1 or 2 more other trusts to register a trust. What does it take us to register?
Now, when I talk about offshore trusts, remember, when it comes to trust registration services, these are very personal things. So it really depends on the lawyer that's doing it for you. So I don't know. I don't feel comfortable speaking for them. But let me just give you a range, and maybe in terms of the offshore trust, you could be talking, depending on the country, also it depends on that and a few other factors. Could be talking maybe around 35,000 USD. Something around
something of that sort.
When it comes to the local, it now depends on the person. Some people are cheaper, some people are expensive. It just depends. It's not something I can speak to personally.
Yes. It depends on the service fees of the person that you're registering.
Yes.
Amazing. You know, sometimes there are families out there. There was a certain scenarios, and I think we've discussed that off the behind the scenes. We've discussed that with him
Yeah.
about a certain scenario where this man is really wealthy. I'm
Yeah.
not going to mention his name,
Absolutely.
but he was very wealthy. He built his wealth, right? So, and unfortunately, he died because death is something that we don't have control over.
Yeah.
And the worst thing he did was actually to trust his side chick with all the properties. The only thing that remained that the family knew about were the small thing that they knew, but most of the wealth, it was the lady that knows about. And so he left his children suffering. How do we, avoid such costly mistake
Well,
happening?
well, I do remember this conversation. I think what I can say to that is, number one, a message to let me say to the men, because I'm also the man.
Yeah.
You know, some of them, you know, you can maybe be fearing your wife will know how much property you have, how much money you have, and then you end up trusting either friends or, like you said, side chicks with this information. At the end of the day, your children are the ones who will suffer, and your wealth and all your hard-earned assets will be scattered to the ground, and other people will enjoy it. Even the government gets to, and I don't want to say enjoy, but to confiscate some of the assets that you've not claimed. We have so many people leaving cash in the bank, billions of shillings in the bank, because your family didn't know you are hiding a certain bank account, and you never told them, and then something happens to you.
Imagine.
All that money goes to an organization, in Kenya called it the Unclaimed Assets Authority, and they take that money and it's put there. What's going to happen to those assets after that? That's not for me to say. Maybe you can go deeper on that. But certainly your kids, the chances of them accessing those assets are very, very, very low. So how do you balance? You see, at the end of the day, I talk to my clients in a very personal way. So I do understand what are their challenges. How do you balance the whole challenge of, you know, maybe your spouse, your children, you know, for some people, this is the reality, they fear their spouses.
To them is wisdom. Like,
It's
let me hide, because they are going to ask me a lot, or
Exactly.
give me this, give me that.
Exactly. So how do you balance this wisdom that you're having of not, you know, maybe showing your woman or your man everything that you own, with the fear of, what if something happens to me and this goes away either way?
Yeah.
The answer is simple. You set up a trust. You put in the money or the assets in the trust, and you set up the rules. I have clients who have trusts in place that say that should they pass away, the spouse will manage the trust on behalf of the children. But even if the spouse is managing the assets on behalf of the children, should she remarry or should he remarry, they would automatically be removed from the trust as a trustee and give way to maybe children, one of the children or two of the children who are above 18 or 25 years of age. So there's a lot of flexibility with the trust. You don't need to hide. You just need to structure your things in a very careful way, so that even if she knows or he knows how much money you have,
it's not going to take it by force.
There's nothing they're going to do. You know, for those who are scared of their spouses and everything, they will not be able to accept
rather than letting other people enjoy it later, because
absolutely.
you are not transparent enough. Nobody knows that you have money. And I think it's one of the major problems that a lot has, especially men. Permit me to say this.
No, it's the truth. It's not a lie.
In the name of I'm protecting this wealth and I'm building it. And sometimes it doesn't really come from the place of selfishness.
Yes.
It comes from the place of, if my wife knows about it or if my husband knows about it, he's going to play with this money, and I am trying to accumulate this for them.
Yes.
But then they later forget that, you know, while you're accumulating, you also need to let them know, should anything happen to you, because nobody knows the day, the time, the hour, right? So there are these families also, like I will talk about maybe, for example, the polygamist, those who are in the polygamist, or let's say the blended families. Maybe you have your two children, you enter into this marriage with your two children. And some people are different. People have different hearts. Maybe the spouse that you enter into marriage with will not really treat the ones you came with, right? And what happens, these other children that you came with might not actually get anything. So how do we protect those children that you came with into this marriage? And maybe your spouse now will only be intentional about the biological children, leaving out the one you came with. How do we protect such children or a child like that in that situation in a blended family setup?
Yeah, as to answer your question, right now in the 21st century, we know that blended families are very widely accepted now. This is the norm. It's not like back in the day, the time for our parents and our grandparents. So I have a lot of clients who also come from a blended background. Again, it just falls to how you draft the trust deed. Remember, no one even needs to know that you have a trust in the first place. So once you set up your trust and put the property there, you'll say that all these kids of mine are going to be in this trust. And these people are going to be the trustees in this trust. The trust, once the trust deed has been set up, the only thing that the trustees really need to find out at the end of the day is that this trust is there and that we are trustees. But as regards the rules, you can even have trust which, we have a trust called a testamentary trust, which operates like a will, which just divides and gives out property. But it's much more solid because it cannot be challenged in succession court. So to answer your question is that the trust is a very flexible instrument. We sit down with you, you tell me I have child 1, 2, 3, 4, 5, 6, 7, or 8, depending on who you are. These are their moms, and these are the people. This is how I want my property to be handled. This is simply about property and property protection. It's not really about emotions. So once you put the trustees in place, you should even think about it from a perspective of, don't think of the trustees as people. Think of it as an office. The same way there's a presidential office.
Yeah.
Anyone who occupies the presidential office is the president.
Is the president.
So don't discriminate. Just say the trustees will decide on account of majority vote. So if you want one of maybe your wife and some of your children to make this vote majority, then they can vote. It just becomes a matter of vote because you don't also want to restrict them so much. If you think that someone is maybe one of your, because it's a blended family, you can just have all the children as beneficiaries, choose the trustees that you want, and now control how they're going to make decisions. You can even say, to sell this property, all of you have to agree. If you don't agree, you're not going to sell. And if you put that in the trust, they will not be able to sell until every signature is on that piece of paper. So there's 100 or 1,000,000 ways which you can navigate this. What's important is to understand how you want your assets to be managed. Who do you want to make? And that's different for every family, depending on how you know your kids, how you know their moms or their dads. But you have all the flexibility provided the assets are in your name. It's your property. You get to decide how you want it to be structured. Yeah.
Wow, amazing. These people, these trustees, are they the trustees, the people that you put in the trust now? You, the settler, now have put the trust and brought the trustees in order to protect this wealth for the beneficiary, who happen to be your children. What do they get? What are their benefits? Do they get allowance? Do they get salary? What do they get?
Okay, so it depends. We also have corporate trustees, which are companies which charge trustee services. They will charge you a fee to manage your assets for you. Okay. For trustees, it just depends. For example, if it's your kids, they have an interest in this. You guys are here, you're trustees, and you're beneficiaries as well. So do you want, for a family, maybe you can ask, do you want me to pay you to manage property that is going to end up in your hands anyway? That you're the ones. So you can say, no, I'm not paying you anything, but we are reimbursing you for all allowances spent, all the money that you spend. If you spend money, say you had to go to take a flight to so-and-so, maybe Juba, to go and look at this type of property, then you should be reimbursed for that by the trust. You can even have them being paid maybe a monthly allowance or an allowance every time they sit and make decisions as trustees. So it's also, again, very flexible depending on the resources you own and what you're actually able to do with the assets that you have. But there is no requirement for them to be paid.
Can the trust play a huge role in the estate planning?
Yes.
Like, can a group of people come together and say, look, let's put our money. Maybe they have a target of buying a big piece of land, acres, and they come together as a group and say, you know what, let's put this money in a trust just for the purposes of that land, so that we don't go back and withdraw the money, right, as a way of discipline. Can it play a role? Maybe you can talk to us on that.
Yes, it does play a role. In fact, what you're describing is something called real estate investment trust. So that's basically a trust formed for investment into real estate. You see, a trust, it can be made for multiple purposes. So it depends on what you want to do. People even make trusts for their pets to make sure that their pets, are taken care of. Yeah, just check out the news. I'm sure you've seen those stories.
Yeah,
where some billionaire,
mostly in the Western world.
Someone leaves $100 million to their dog. They don't leave it to the dog; they leave it to the trust. Hey. They're supposed to take care of the dog because maybe the dog was there for them and the kids weren't around. So they'll let me leave it to the dog. I want this dog to live in luxury. So that being said, when it comes to investment, you can set up a real estate investment trust to achieve what you just said, which you can now buy property together, invest in it, have the trustees manage the properties, and basically move in a very, bring resources together so that you can invest in a collective way, but in a very solid structure. But usually, though, we do trust and companies to structure such types of arrangements. Because, primarily a trust is not made for business per se. It's made for the holding of the assets. Yeah. So you can have a trust owning a company and have the company maybe selling that property, you're subdividing, selling the property, but the assets, the money that you get goes back into the trust. So it's about creating value on this side and taking the value that you created and putting it somewhere safe. For who? For whoever you decide now in the back.
Benefit the
beneficiaries, yes.
The like of Rockefeller, right, and Oppenheimer. How does it work? How do they work? Are they legacy trusts?
Yes, you could call them legacy trusts. Essentially, all trusts operate in the same manner. It just depends on how deep down the rabbit hole you have to go, because some families like the Rockefellers, Oppenheimers, Walton family, them they have multiple companies, multiple assets, boards of directors and everything. So what basically the Rockefellers did is they separated the ownership of the assets from control of the assets. So the children and the descendants of Rockefeller are beneficiaries to the Rockefeller trusts, but they may not necessarily be participating in the decisions of how those assets are managed. So they will continue for hundreds and hundreds of years being something called trust fund babies, traveling the world, just buying yachts and, just having a good time. And, if it's education or healthcare or anything that they want to do, they go to their trustees and request it. So it depends on how it was structured. But the idea is to separate ownership from control, because at the end of the day, generational wealth, in my view, boils down to one thing: true generational wealth. It's the transfer of skills, not necessarily assets. That's why you'll find someone who is very rich passes away, and you see, then it transfers the assets to the children.
Yeah.
But why is it destroyed within a few years? Because the skills for acquiring and managing that asset was never downloaded into the child. So when you separate now the ownership of the asset from the control, you can now leave the management of the trust to someone who has the skills to maintain and grow that wealth, but make sure that it is only the children who are benefiting from it, because maybe they just don't have the skills. And who do you choose as a trustee? That's now up to you. I don't advise my clients on who to choose. So you understand what I'm saying? Yes.
So why should people come to Wakili? To you in particular?
Well, I don't want to maybe market for myself. No, I think you should just come to me if you resonate with what I'm saying and the message that I'm putting out there. I feel like for especially Africans, that we need to level up our mindset and find out what's really going on in these upper echelons when it comes to generational wealth and wealth creation, because these are things that are available to us. We just don't know. So I'm not going to say whether you should come to me or not. I'm just saying, if you resonate with what I'm saying, if you feel what I feel and what I'm saying about us building generational wealth as Africans here on this continent, because we are rich, we are very rich, but we have been convinced otherwise that we are poor. We are not poor. We just need to plug into the system and use it to our advantage to ensure that we are the ones who end up on top. Yes, that's my view.
I like that. Yeah, we should be ready. We should not be surprised by certain things. I think intentionality really works best here. We should be able to understand that at the end of the day, everybody will go, everybody dies. And you have your children, you should think of, and I think it's a mindset that we need to shift from as African, to sort of shift from just concentrating on what is good for you without thinking of the generation that is coming after you. So it's amazing. Where can someone find you if someone wants to come to your office and, inquire all this about the trusts?
Well, my office is in Nairobi, Kenya, in Upper Hill area. There's a building called Renaissance Corporate Park. If you want to find me, you can find me on TikTok. You can find me on YouTube. I'm called the Real Wakili. You can follow me. My contact details are there. And I think now because we are living in a digital world, it's more important for me to give you my digital footprint other than my physical location, because I even have clients in South Africa, I have clients in Uganda, but my main point of contact is online, TikTok page, YouTube. You can also find me on LinkedIn. My name is Marvel Oloo, Marvel like marvelous. And so you can reach me on my handles, which I'll of course share with you. Maybe you can share with the audience.
Thank you very much, Wakili. That was amazing insights. I'm sure people have now learned. And for those of you who are watching, I know you're also like me at one time, thinking that trust belong to only a certain group of people. But if you really want to create that generational wealth, you want to secure your assets, you want to protect your loved one, whether you're in a blended family or in any sort of situation at all. Now you know that this is a very practical conversation. You know what a trust means, and he has really taken us through what trust is and how it works. So if you are interested, he has already given you the number. He already told you the location where his office is located. Feel free to reach out to him and protect your assets, protect your loved one, protect whatever that you have worked so hard to build, so that it's not wasted. And be ready, because death is guaranteed. He always says that, right? I remain your host, Nyawargak Bol, and guys, we love you so much. Please share this content with your loved one, with your friends, so that nobody misses such a conversation. And see you next time. Bye-bye. God bless you.
Bye.